The financial markets have changed drastically since I started trading 15 years ago, which means traders today need to adapt to a whole new set of rules to succeed. I'm Lance Breitstein, one of Wall Street's top traders with over $100 million in verified profits, and here are the 10 major ways the market has changed and how this impacts your trading. In 2011, when I was first interviewing for jobs out of college, I had two exploding job offers. One was to work at Trillium, a top day trading firm for equities, and a sales and trading offer at a large Wall Street bank. The managing director at the Wall Street bank scoffed at my Trillium offer. Day trading is dead, he said. Between algos and high-frequency trading firms, nobody makes money doing that anymore. Fast forward 15 years later, I became one of the world's top day traders, taking home over $10 million per year in some years. Now, even in today's age of AI, not only is day trading still alive and profitable, but it's thriving. Traders are making more than ever. The top 10 P&L rankings at Trillium have only gone up and up over time. You can go on social media now and see hundreds of traders in their 20s making millions of dollars. Yes, many of them are even totally real and verified. Trading has taken over the mainstream world between the Wall Street bets phenomena, the popularization of crypto trading, and trading apps like Robinhood. So the first way trading has changed over that time period, it has become more profitable and more popular than ever before. The second way markets have changed, when I first started trading, the impact of news got priced into the stock far slower than it does now. Not only are market participants far more informed, scraping every corner of the internet and the world for even the most obscure of headlines, but there are now algorithms in news trading. The first news trading algorithm started most notably around 2014 or so, when a bot started trading the huge M&A headlines. What that means is nowadays we are competing with computers and AI, but that absolutely doesn't mean this niche is obsolete. If you are equipped with the right news sources, there is still tons of money to be made in this trading style, but it does mean you need to be lightning fast and super focused. This niche has become far more winner takes all, and if you can't be glued to your screen, this niche is no longer worth pursuing. The third change I've noticed over the last 15 years is the duration of panics and downturns appear to be much shorter. Before, panics and downturns occurred, but it would take many months or even years to recover. Now, my belief is that most panics and downturns tend to last far shorter than they used to. In fact, the biggest trade of my career, where I made $10 million in one night, was during one of these short panics. I share the story and the learnings in this video. Literally, within days of the down move, the market had fully retraced all of the panic. So why are panic and downturns shorter? Well, I believe investors and traders have gotten far better at looking ahead and discounting the future as opposed to fixating on the crisis at hand. This felt true during COVID, one of the greatest global panics ever, when markets recovered in 2 months. And this felt particularly true more recently during the 2025 tariff panic, which was fully recovered within 3 weeks. As traders, I think that means during times of panic, we need to be far more open-minded about how large the bounce might be and how quickly the bounce might occur within. Particularly for options traders, those two factors can have massive implications. Number 4, back when I started, only the largest companies had an active options chain, and most tickers didn't have options at all. Nowadays, almost every company you look at has an options chain full of expiries and strikes. When Circle and Figma IPO, options are rolled out within days, which otherwise would have taken months. Because of this, now options volume is far greater, and often now options are the tail wagging the dog rather than the dog wagging the tail. Think about how all the options buying in tickers like GameStop or AMC help send those tickers to the moon. We will see dynamics like that play out to this day in smaller cap stocks. For the trader, overall this means more opportunities. Options are an incredible tool to structure better expected value trades, so sophisticated traders are able to further capitalize on opportunities. I've been called lately to make a video on how I trade options, so subscribe and turn on notifications if you want to see that video. The fifth way the markets have changed is the short squeeze risk. In the past, you would almost never see stocks totally break loose from any form of rationality. Even if stocks did something crazy, maybe they would make a 10% or 20% move, 50% 10% move tops. Today, the risk of unfathomable short squeezes is way higher. Back in 2021, I took my biggest loss ever in Avis Group, a boring multi-billion-dollar car rental company, when it went up over 100% in a few hours for pretty much no reason. I tell that story in this video. Another example is the move we saw in the recent IPO Circle. This IPO, priced in the 30s, is a stable multi-billion-dollar company, yet within a few months it was up over 10x. We've also seen crazy short squeezes in illiquid Chinese names and all sorts of funky stuff. The takeaway? Never say that something can't happen. Risk management and daily stop losses are more important than ever to survive in this market. Number 6 is a big one, and it's truly changed the trading game. When I first started trading, it wasn't common for young people to have a brokerage account or to learn about stock trading. Today, accessibility to trading and trading knowledge, like the quality of videos here on YouTube, has skyrocketed. Between Robinhood and funded trader programs, everyone is now trading something. If done in an educated manner, I view this as great for society. As I argued in this other video, backed with cold hard data, traders are needed by society. Not to mention, having a society educated in smart investing and money management habits helps people and families thrive. For us professional traders, it also means increased volumes, increased liquidity, and increased opportunities. Particularly when those Wall Street bets guys want to bet on some dumb YOLOs. Alright, number 7. In the past, there were tons of inefficient order flow opportunities that came from fat finger trades. Someone going high bid at a stupid price or low offer at a stupid price. Now, order flow is far more efficient thanks to algorithmic trading and better safeguards at brokerages and firms. This means less free money for us traders, and more algorithmic trading also means that, in my opinion, reading the tape, while still useful, is far less critical than it used to be. The 8th way markets have changed is types of products we can access and how long we can trade them. Before, you couldn't trade crypto at your brokerage account. You also couldn't trade futures at many places. Not to mention, there is no such thing as an overnight trading session. Today, traders' access to the casino has greatly expanded. Overnight trading, crypto, futures, that is a massive positive for professional traders. If you have edge and make money trading, you are going to make more money the longer you can make bets and the more things you can bet on. Yahoo! On to number 9. Prior to 2021, I don't think we had seen a euphoric market since the dot-com bubble in 2000. Yet nowadays, the frequency and consistency of which we continually get these periods of euphoria has surprised me. With so much retail hype, it seems like euphoria that might have been limited to a pocket is much more pervasive now. It used to be the weed stocks or the 3D printers, and would be limited to a small basket maybe once every few years. But now, it seems we rotate between areas of euphoria throughout the whole year sometimes. It feels like over the last year, it started with Trump policy optimism, then AI, and then moved to quantum computing stocks, and then low float stocks, and then IPOs like Circle and Figma. Overall, this is fantastic news for traders. More euphoria once again means more opportunities for us to profit. Before getting to the 10th way markets have changed, I want to invite you to join my trading course if you're ready to accelerate your trading career even faster. The link is in the description. So now on to the final one. The 10th way markets have changed is that before there were far more active flows, meaning there were more active money managers, more hedge funds, more prop shops doing volume. Yet now, index funds and ETFs dominate inflows. What this means is that the overwhelming majority of stocks are mostly just moving with the index most of the time. That means it has become even more important for traders to find in-play stocks, or what I like to call finding the broken slot machine. These are stocks that are making large, high-volume moves that are idiosyncratic from the market. Today with AI, it feels like the world is moving faster than ever. Many wonder what will become of trading and how AI will change it. The truth is, I have absolutely no clue, but I do know one thing. A few years from now, Lance, or Robot Lance, will still be producing banger videos on this channel, so like and subscribe.